Hi, it's Mike. Can anybody hear me? I don't see or hear anything.
I can hear you, Mike.
Has the meeting started?
I'm not sure. I'm waiting. I'm not sure.
Because I haven't seen anything other than your picture.
Yeah, Dina is on the call, but the video is not on, so I'm not sure about it. I'm just waiting for the go signal, I think.
I see Deb's name and Dina's name, and that's all.
Same here. I can see both of them and you, but that's about it.
And
Mike,
I got some sound that said the recording has started. Dina, are you there? Yeah, I left the meeting and came back on to see if it would work any better, and nothing. Well, I'm getting a call from Matt. Hello?
Hey, Mike, we can see and hear the both of you. We're having a little technical difficulty on
Oh.
our side. Give us a few minutes to get it.
Oh, okay. I'm now getting a picture of the meeting. Okay, I'll just hang in there.
Okay, bye.
Okay, bye. Matt says they're having technical.
Can you hear us now, Mike?
Mike, we can hear you. Can you hear us?
I can.
Wonderful. We had made introductions just a moment ago. Matt, would you like to introduce the other staff member who is calling in from, is that a staff member calling in from online?
No, that's part of the auditing team.
Oh, I see. Okay.
I can't hear anything.
I can, or I did.
Yeah, earlier I can hear something, but now it stopped.
Yep. So we have two devices in this room that are somehow connected to Zoom with audio.
Yeah.
That's why we're getting that echo effect.
It was not me. We need the Jeopardy music. Do, 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 do.
Can you still hear us, Mike?
Yes,
Okay.
Wonderful. Okay, we're going to go
Can you
ahead
see? Can you see us?
Oh, can you see us?
I can see the wide view of the whole meeting, yes.
Fantastic.
Wonderful. Okay, well, we're going to go ahead and move on then. We approved the agenda by a majority. Mike, we didn't take your vote, but if you'd like to vote now, do you approve the agenda or do you have any
I
changes?
will approve, yes.
All right, thank you, sir. We've been through public comment. We've been through all of our general announcements. So now we are on to our consent agenda. Would someone like to make a motion for the consent agenda? Jesse is making a motion to approve the consent agenda, and it's seconded by Liz. And I would like to entertain some discussion on this consent agenda. The reason being there was an error on the governance. One moment. The governance committee meeting that was held on 3/23 under 1.2 communications, it says reminded the executive team. It should be reminded the governance committee. So if we could make that change and add that to our vote to approve the consent agenda as amended. Do I need to take another? For Robert's rules, Matt, am I supposed to take another stab at first and second, or first and second is good?
Did someone move and second the consent agenda?
And I amended some of the wording in the agenda and
Before the motions?
after the motion. So we need to take a new motion.
Technically, you got.
I apologize, everyone.
See if there's any discussion, and then.
This is turning out to be quite a Monday, isn't it? So would anyone like to make a motion to approve the agenda with the amendment as written? That would be Rich and Simi. Thank you so much, everyone. I appreciate that. We're moving on.
We still need to vote to approve the consent agenda.
That was the, I see what you're saying. So my secretary is telling me that that was for the approval of the correction to the agenda, and now we actually need to improve the entire consent agenda. So we'll take a vote on that. Would somebody like to bring that into the record? Susan? Seconded by Monica? Okay, I just saw your hand and, all right. Okay, now we have the consent agenda with the changes. We're all
We need
set.
to vote on the consent agenda.
Correct. So we'll take a vote on that. Everybody who is in favor, raise your hands. Thank you. Awesome. All right, we're off and flying now. First up is our special items. We have an audit presentation tonight by Ms. Dina Reed and UHY. Thank you.
Thank you, Madam Chair. Today, in your packet, you have a preface to the financial audit and some information about the financial audit that was presented previously at the Finance Committee, as well as reviewed in detail by the Audit Task Force of your board, of fellow board members. And everything to this date has been approved satisfactorily by both the Audit Task Force and the Finance Committee. This is the presentation of the results of the audit to the full board. And with us, we have one of our auditors from UHY. I'm going to be sharing the presentation, and Jen from UHY will be introducing herself and walking us through the presentation. So if you have any questions for the auditor throughout the presentation, just indicate that you have, and there will be more question opportunities at the end as well, so the board can receive and understand the audit in its entirety. So Jen, I'm going to share my screen, and you are welcome to begin whenever you're ready.
All right. Hi, I'm Jen Mojares. I'm the senior manager in charge for the audit of the authority. Both my partner and principal cannot make it today for some firm-wide conflict with their schedule. So, I mean, that's why I'm here to present. Next, Dina. So independent auditors report. We have audited the financial statements of the Ann Arbor Area Transportation Authority as of and for the year ended September 30, 2022, and the related notes to the financial statements, which collectively comprise the authority's basic financial statements. We have it on the financial statements. I believe you guys all got a copy of the report. So we will be issuing an unmodified opinion. We issued actually an unmodified opinion, which is the highest level form of opinion that we can present. We also audited the schedules. If you can go back, Dina, sorry. We also audited the schedules contained in the additional information section and the schedule of federal expenditure, in which we plan also to issue an unmodified in relation to opinion, which is again the highest form of opinion we can provide with your single audit. We are required as part of the standards to communicate to those charged with governance certain responsibilities. Next. Accounting policies. So we're required to communicate to you that management is responsible for the selection and use of accounting policies. Significant accounting policies are summarized in note 1 of the audited financial statements. So on your copy of the financial report, there is a section pertaining to all the significant accounting policies under note 1. For this year, the authority adopted GASB 87, which relates to leases in fiscal year 2022. The authority did not have any leases that require capitalization. So an assessment was made by the authority together with Raymond to identify any potential leases that will comply with this GASB or accounting standards. Next page. Accounting estimates were also required to communicate to you accounting estimates. Certain amounts in the financial statements require management to make estimates and assumptions. And as part of the audit procedures, we evaluated the reasonableness of those estimates. We're also required to communicate to you significant audit adjustments. So after our audit, during our audit, actually, and at the final conclusion of the audit, we identified two proposed audit entries as part of our audit process, which total about 2.4 million, and management has made these adjustments. There were also two past adjustments related to compensated absences, and these entries were deemed immaterial to the financial statements as a whole. Next slide, please. We're also required to communicate documents containing audited financial statements. We are not aware of the audited financial statements being included with any other documents other than the single audit reporting package for the Federal Audit Clearinghouse. We are pleased to report also that there were no disagreements with the authority's management over the course of the audit. We're also, to our knowledge, there were no consultations with other accountants. Major issues with retentions, there were no issues discussed with management prior to our appointment. As a result of turnover in certain key positions at the authority, the start of our audit fieldwork was delayed until the first week of January. And during the course of the audit, the authority continued to evaluate the account balances. And as a result, 10 client adjusting journal entries were made during the audit fieldwork. But overall, I guess even with the significant turnover with the finance, the team still met the deadline for the filing requirement of MDOT. And I would like to, thank Dina and her team and Raymond also for working with us with this, with all throughout the audit. It's a little bit difficult, but we made it through. So I just want to mention that one. All right, so this one is just based on our presentation. Instead of doing the financial statements, since you guys already have a copy of the report, we normally do the presentations based on a pie chart. And I'm gonna highlight only certain sections. And if there are questions as I go through the presentation, please feel free to ask a question, and I will try my best to answer to the best of my ability. All right, so as you can see, so assets and deferred outflows are what you actually own. So for this presentation, the capital assets are the significant decreases. I think there's a significant decrease in the capital assets here, but basically just the impact of the depreciation during the fiscal year. It's a non-cash transaction. If you recall, I believe for 2021, a large part of the buses were purchased in 2021. So this year, the impact was mainly the depreciation. That's why you'll see a decrease in the capital assets for approximately 5.1 million. With regards to cash and investments, these two always fluctuates, based on mostly on timing. Investment increase for about 7.4 million, largely with the full operation during fiscal year 2022, local sources of revenue significantly increased, and we will go over that one later in the revenue section presentation. Cash slightly increased, approximately only 1.8 million. I believe there was like a cash that was held. Usually excess cash are transferred to investments by the authority. This year they did a move of excess cash to investments related to the capital reserve. Correct me if I'm wrong, Dina. And then cash actually was retained for approximately 1.8 million. Mainly, there's an estimated purchase that they anticipate in October for new buses. So I think they left a few 1.8 million cushion there for the purchases for the next month after the fiscal year end. All right, next slide, please. If you will see the liabilities, there's not a whole lot of significant differences or decline or increases. So it remains, liabilities is actually what you owe. And the net position is what's left between assets less your liabilities is what's left on the balance sheet, or the balance sheet of the financial statements of the authority. Okay, revenue, here is the revenue. In this presentation, we identified and classified it by operating revenue, non-operating revenue, and capital contributions. I'll start off with the capital contributions. As I mentioned earlier, a large part of your buses was purchased in 2021, which you can see there's about 6 million in last year in terms of capital contribution. And majority of your bus purchases are through a capital grant. And then this year, there's only a few, about 1.3 million in capital contributions. Operating revenue, as expected, increased during the year, mostly with getting back to full operations. Passenger fares increased approximately 1.3 million due to COVID recovery and getting back to full operations. So I think that's one of the large increase there. And with relates to non-operating revenue includes local sources, state and federal grants. During the year, there's about 1 million increase in local revenue, approximately from property tax, or about 1.6 million. But the local operating revenue with the net increase of 1 million was offset by a grant received last year from Toyota. I think that was only a one-time grant that the authority received, and they did not receive another grant in 2022. So basically the increase in property tax net of the 704,000 from Toyota practically increase your local revenue approximately 1 million. State revenue increase 2 million. Your formula operating assistance for urban was 13.3 million in 22 versus 11.2 in 2021. This going back again with full operations in 2022. Eligible expenses in 22, as we expect, increases compared to last year. Despite the the decrease in rate of full reimbursement from fiscal year 2022 was, I think, only about 29.51% versus 31.6% in 2021. Federal revenue increased approximately 2.4 million. A large part of it is the new route, the new D2A2 federal grant from RTA, which is approximately 2 million. Next slide, please. So I think this one only snapshots the different non-operating revenues that I discussed. So as we expect, if operating, revenue and non-operating revenue increases, of course, it goes with the operating expenses, especially the large part of your federal and state revenues are coming from expenses, eligible expenses. All All right, the schedule of federal awards, you can see the 21 million from last year are, this one we just separate the federal transit cluster and versus the other grants. There's not a whole lot of differences between the two, so it remains consistent, but still you guys were still subjected to the what we call the single audit. All right, internal control reporting, internal control over financial reporting. In conjunction with our audit of the financial statements of the authority, we considered the authority's internal control over financial reporting as a basis for designing our auditing procedures for the purpose of expressing our opinion on the financial statements, but not for the purpose of expressing an opinion on the effectiveness of the authority's internal control over financial reporting. However, we are required to communicate in writing to those charged with governance, all material weaknesses and significant deficiencies that have been identified during our audit. On the next slide is the definition of material weaknesses and significant deficiencies. Next slide, please, Dina. Yeah, so a material weakness is a deficiency or a combination of deficiencies in internal control, such that there is a reasonable possibility that a material misstatement of the entity's financial statements will not be prevented or detected and corrected on a timely basis. While on the other hand, the significant deficiency is also a combination of deficiencies that is less severe than a material weakness, yet important enough to merit attention by those charged with governance. So our consideration of internal control was for the limited purpose as I described in the preceding slide, and it was not designed to identify all deficiencies in internal control that might be material weaknesses or significant deficiencies, and therefore material weaknesses or significant deficiencies may exist that were not identified. For this particular internal control over financial reporting, we wanted to report that we identified a material weakness which relates to the state revenue account that was overstated by approximately 2 million. So basically, we're not saying that over the months that there was like an issue, because I think the way the reporting for MDOT on a monthly basis, you guys get your funding. And at the end of the year, while after analyzing all the eligible expenses that requires to be included in the local bus operating subsidy, we have identified some overstatement in terms of the revenue. And that was adjusted by the client during the course of the audit. Internal control over compliance. This is the opinion which relates to the single audit. So in conjunction with our audit of the federal expenditures of the authority, we considered the authority's internal control over compliance for each of the authority's major federal programs. I'm not going to go over the entire paragraph, but we are happy to report that we did not find any compliance, non-compliance or material weaknesses or significant deficiency related to compliance of your federal expenditure. Upcoming accounting changes. This is a big thing for most government this coming fiscal year 2023. So we normally would want to inform the client of any upcoming accounting changes. This relates to GASB 96, which is a subscription-based information technology arrangements. This is related to any of your, I think in our finance and audit task force presentation, I would recommend, going over with your IT department, all the related software that you guys have, and making sure, make an assessment in terms of whether the authority will have to adopt this GASB 96. What it means is just, it's almost similar to the GASB 87 leases. What it requires in the past, if it meets all the criteria, now GASB is requiring the government or the authority to present it as an asset and a liability. So basically just grossing up the asset and the liability, the impact of it is really a net impact. But there's certain criteria that has to be met in order to identify if you are qualified for GASB 96. But a lot of our clients are working through with their IT department, because they may have a lot more information when it comes to contracts with your any information technology arrangements. And that concludes my presentation. If there's any, this is the contact information of the partner, Michael Santisha and Marlene Beach, who's the principal on the engagement. And Dina also has our contact information.
Jen, thank you for that very comprehensive report. I just wanted to say that that concludes our report from the financial auditor. I would like to turn it back to the chair for any questions or discussion on the agenda item.
Does anyone have any questions on what was presented tonight with regards to the audit? Yes, Richard.
So I want to first off say, I mean, that's phenomenal. I mean, between COVID and all the other financial stuff, to have that clean report. I think for me, it's just more a knowledge question I have. So at the very beginning of the presentation, you mentioned there's like a 2.4 million that had to be like 2 audit entries. Was that material weakness that you mentioned later on that was approximately 2 mil?
Yes, yeah, that relates to that local I forgot, the LBOA, bus operating assistance, that you guys that the authority normally receives. That's the 2 million. And then I think the other part of it is mostly the property tax. I think it has something to do with the property tax. So we have to gross up the property tax receivable versus the revenue. So since we found it during the audit, we have to present it as a proposed audit adjustments.
Okay, thanks.
Do we have any other questions? Thank you, Gina, to you and your staff, and Raymond, who came in and gave us that hard assist in UHY for all of your valuable work on the audit. We appreciate it. Thank you so much.
Thank you.
All right. We're going to move on then to ownership linkage 4.1. That would be Mr. Richard Chang.
Hey, everyone. Okay, so I know it's been a little quiet in regards to the ownership linkage task force. We know it's an important, critical part of our roles as board members. So just want to let you know that this coming Monday, we'll be sending out the first outreach, which will be to the Ann Arbor mayor. So we have that template form that a lot of you gave awesome feedback. So I'm planning on getting that out Monday. And then also look out for an email from me regarding scheduling the next task force meeting. So I want to get that scheduled and we can have some discussions, especially when we hopefully get some response back from the Ann Arbor mayor as to what he'd like to do. And that's all I have.
Does anyone have any questions for Mr. Chang? Seeing none, we'll move on to 5.1, monitoring, the monitoring task force update by Mr. Mike Alamang.
Thank you. The task force had, of course, 2 meetings since our last board meeting, which was in March. We spent a lot of time on the issue of thoroughly reviewing the content of policies. Not the monitoring of them, but the policies themselves. And we are recommending that we have 2 to 3 of these thorough policy reviews each calendar year. And the most likely time to have them would be fairly shortly after the actually monitoring report was reviewed by the board, so it would be fresh in everybody's mind. And we think that these reviews should start at the committee that is really responsible for for reviewing the monitoring report. And they would therefore also be doing the review of the policy of themselves after the monitoring report had gone to the board. It would probably take 2 or maybe more meetings for them to thoroughly review that particular policy and come up with some recommendations on changing it, or maybe not even changing it. And once they have those recommendations, they would present them to the board. The board would take whatever time they felt it was necessary, probably again, more than one meeting, to review what was proposed, to discuss it. And then the objective would be to have that policy approved, the revision to the policy approved in time for it to be used in the next monitoring report, which would usually be 1 year after the last monitoring report. We are recommending actually 3 reviews to happen next. The first one being 2.1, the treatment of traveling public. And fortunately, the service committee has already done that review. And I presume that they would be ready to bring it to the board fairly soon, one of the upcoming board meetings. That would be just, again, as I just mentioned, discussed at the board, that recommendation discussed, potentially agreed to or modified. And hopefully the board would put into place a revised policy in time for it to be reviewed, to be used in the next monitoring report, which for the 2.1 is November, for the November board. And that seems very possible that that can be done in that time frame. I hope Jesse agrees with that. The next couple of policies that we are recommending to be reviewed. First one is 2.4, financial planning. The next is 2.8, the emergency CEO succession. Now, our governance coach, Rose, who has been really helpful in these meetings, is recommending broadening 2.4 to include both operational, in addition to the financial planning, operational planning and financial planning, and perhaps even folding in 2.8, the emergency CEO succession, being an operational issue. The task force really has not had a lot of time to discuss that particular recommendation, but it sounds like a very attractive one to us, but we're not yet ready to recommend that. Let me mention that the 2.4 policy is due to be reviewed at the board in September, 2.8 in October. So the timing of these, of potentially modifying these 2 policies is really too short between now and the time that those monitoring reports have to go to the board, which are September and October, as I said. So it's likely that these would be reviewed and discussed and come up and a recommendation made by it would be the finance committee in this case, probably in very late 2023 or certainly by the first half of 2024, which should be in time to have a revised policy in place if that's what the board decides for that review in September and potentially also in October. The task force also started to discuss having, in addition to these thorough reviews of policies, to have some brief policy reviews of policies that are not being, at least in the near term, being reviewed and thoroughly. These would be where in the past, during the review of the monitoring reports, people were suggesting wording changes in other kind of fairly minor revisions to the monitoring reports. We think we will be discussing this. We certainly haven't come up with any kind of recommendations how that might be handled, but we think it would be a good idea to have, in addition to the 2 or 3 very thorough policy reviews during the year, to be able to really cull from past monitoring reports, comments and suggestions that were made, and potentially schedule those sometime, which wouldn't be nearly as thorough or nearly as comprehensive in terms of the time that they would take. So anyway, that's where we currently stand. I think we'll be soon ready to make the proposal along the lines that I was just talking about of having these 2 or 3 policy reviews during each calendar year. We're not quite there yet. So, Madam Chair, that ends my report. If anybody wants to ask questions or have some comments on that.
Guess we'll open up the floor to questions for Mike. I'm seeing none, Mike. Thank you so much for a thorough report. I appreciate it.
Okay, thank you.
We will now move on to a monitoring report. We will talk about cash and investments 2.6, and that is Ms. Dina Reed.
Thank you, Madam Chair. Monitoring report 2.6 on cash and investments is in your packet and was previously reviewed in more detail at the Finance Committee meeting on April 11th. I will just share some highlights from the meeting. When we had that meeting, we had some good discussion around the investments and how much cash we hold and what's insured and what's not insured. So I'll draw your attention to some of the evidence that we provided demonstrating compliance with this policy. Under evidence, there is a table 2.6A, which demonstrates how much cash that we hold in cash checking and money market balances. There's a subtotal on there of $3,498,000, which is about $3.5 million. That's how much uninsured cash we had at the end of March 31st. That's about the range. We typically keep it more around 5 million on a regular basis. We were ready to do a drawdown when that hadn't been completed yet. The goal here is to only keep as much in this account or in these accounts as we need to maintain cash flow. Everything else is in insured accounts, either in a CDARS program, an ICS program, or in longer term investments. The way we manage investments is according to our policies, of course, in terms of what we're allowed to invest in, which is usually just agency and treasuries, agency bonds and treasuries, so it's very secure instruments. We manage the investments based on what we determine our cash flow needs will be, both in the short term and in the somewhat longer term in relationship to meet operational needs, as well as capital investments and matching funds for other for capital investments. So that's just a little summary of how we manage our cash and investments in accordance with the policies that the board sets. We also included, as evidence of health of the bank, some independent reporting that demonstrated that the health of the bank was in an A+ rating. And we have had many discussions with the bank as of late to ensure that we understand how our bank is performing. We had a meeting with them today. I know Mike has mentioned at the Finance Committee meeting that he has had some individual discussions, all in the effort of making sure that in light of the current industry issues in the banking industry, that our cash and investments are sound and safe. In the end, the Finance Committee all agreed that the monitoring report was compliant in all areas. That includes my report, but I'm happy to answer any questions, and I'm not sure if Board Member Alaming might have anything to add.
Mike, as our treasurer and the chairman of the Finance Committee, would you like to go first? Do you have anything that you'd like to add?
I think it might be best if there's any questions that come before I give my conclusion, really.
Fair enough. We'll open it up to the board. Does anyone have any questions? Mike, that was a no-go. It's up to you.
Okay, well, I'll say a little bit then. As Dina already said, the Finance Committee did review this, I believe, thoroughly. We felt comfortable with what was reported, as well as, I'm sure the board has all looked at the responses that 6 board members gave. They all felt, and you can see in the chart in there, it's all green. They all believe that the interpretations were reasonable and the evidence demonstrated compliance. And of course, certainly the Finance Committee agrees with that too. And so we recommend A, which is reasonable interpretation for the policy and the evidence demonstrating compliance, but with the yeah, and it's as simple as that.
Thank you, Mike. And with all the information that we've heard this evening, would someone like to make a motion to approve the policy and monitoring report for cash and investments 2.6?
Motion to approve.
Motion made by Monica. Could I have a second? That would be by Ms. Gerber. Any discussion on the motion? Seeing none, we will go ahead and take a vote. All in favor, raise your hands. Wonderful, that passed unanimously. Thank you very much. Now we're going to move on to 5.3, communication and support to the board, policy monitoring report 2.9, and that is Mr. Carpenter.
Thank you, Madam Chair. Since Dina's been very successful in not getting a lot of hard questions, I have a feeling I'm about to get it on this one. But thank you for the opportunity to present the monitoring report for a non-financial matter, communication and support to the board. This policy covers a number of things, including the no surprises clause, logistical, making sure you have meeting rooms and well-appointed facilities, and then a variety of information that you have requested be provided to you. The report begins on page 51 of your packet. We have not recommended any particular version of A, B, or C for you. This policy really depends a lot on the subjective feelings of the board itself in terms of how well you feel compliance is done. So I'm not going to try to second guess whether you think it's an A, B, or C, but I will tell you that I am reporting partial compliance. I'll walk you through the 2 things that I see as non-compliant. I think they're relatively minor and can be addressed in due course. So there are really only 2 things that are non-compliant, but they are in sort of 3rd level down sub-policies. So our practice is if one of those is non-compliant, it rolls up to cause the parent policy to be non-compliant. So you see more yellow starting on page 53, which is our sort of red, amber, green traffic signals for how well it's going. The first policy I want to pull your attention to is 2915 on page 62. This is a financial notification policy. I guess I was wrong there. This has to do with notification of expenditures over $250,000. I noted in the monitoring report that we have made several such, but no notifications were made to the board. Obviously, we need to fix that. Staring at this evening, I had a different thought. I think this might be a typo. I think this policy originally said notification of unbudgeted items over 250, not budgeted items. I would like your, if you don't mind, a little extra time to go back to see if perhaps some sort of typo crept into the policy manual that we didn't catch. If for some reason it's not a typo, the evidence and compliance that I'm reporting here stands. If it's not a typo, we got to start notifying you of these things. But to put this in perspective, every bus we purchase costs $600,000. We do a lot of things over 250. You approve those in the budget. It doesn't seem to make a lot of sense to come back to you and tell you every time we do that. I think this was intended as a trigger for unbudgeted items and some sort of typo crept in. With your leave, I'm going to double check that and let you know how that turned out. The second thing of non-compliance is on page 68. This is a little more substantive. This is policy 2923. This has to do with whistleblower policies. The policy says that I will not hinder access to the board by any person who alleges unethical or unlawful action or circumstance in the organization or by its representatives. I feel like I've been having similar conversations with some of you recently. What I've noted here is that we have a full suite of whistleblower policies up and down the organization. Ultimately, if anyone feels, and we publicize this to staff, if anyone feels there's anything dodgy going on, go to HR. HR reports to the CEO, but what if you've got a complaint about the CEO? So I'm reporting partial compliance because that's a gap, that there is no standing whistleblower procedure against the CEO themselves. Now, personally, I hope I never do anything that causes anybody to want to blow a whistle. However, for your protection, for the agency's protection, we've identified before anything's happened, this is a gap, we need to fill it. That's why I'm reporting partial compliance. I will work with HR and our corporate counsel, Dykema, to come up with a compliant way to fill this. I would suggest, for your consideration this evening, as we monitor this, when you consider how you will accept it, I would suggest you monitor this again in maybe 4 months, this particular policy, because this has to do with the CEO themselves. What's the whistleblower policy? It is a means, it definitely is a means, it's a very HR-y sort of thing, but because it's the CEO, I feel like it kicks up a little bit. It's kind of into board territory as well. I think it's fair. I think I know what the solution looks like. I want to work with HR, I want to work with corporate counsel, who does not report to me. I think that's the key thing you'll see in my recommendation is I want to involve someone that could be spoken to that does not report to me. They report to you, actually. So when you consider how you want to accept this report, I would suggest you give me a deadline where you monitor this again in 4 months, and I've got to present you with an interpretation and evidence of how that is, how I'm going to fill that gap, and then you get to see if you're comfortable with what I'm proposing in that space. Again, if this were normal HR stuff, it would be, a means for me and the HR manager, but because it's the CEO position specifically, I think it rises to your level. I think there's a level of your involvement that's necessary. So those are the two non-compliant issues. Again, I don't think either of these are unworkable. I think they're relatively minor and can be addressed in due course. Further in the report, you'll notice that there are some notes from the governance coach and the CEO on page 72, raising various questions about the policy, items you may wish to consider for future policy development. We have a trend bar. If you look on page 73, again, going back to our red light, green light, amber light process, you can see how this policy has been judged in the past, and generally we're kind of par for the course in terms of compliance on this one. And the board member survey is on page 75. Generally, overall green, good scores from board members, but also some good questions, both pertaining to sort of the organization, the numbering of some of the things in the report, but also the opportunities to perhaps go back and tweak some things with the policies themselves. So in closing, Madam Chair, thank you for this opportunity to present this. This is one very much directly to you guys. I am looking for a board discussion and some sort of conclusion as to whether you find this, what degree of compliance you find this, A, B, or C. Thank you very much.
For clarification, on policy 2.9.2.3, you did give a compliance timeline of the end of 2023, but I think I just heard you say 4 months. So are you changing that request from what is written then? Is that what we're hearing?
I should be able to get this done in 4 months.
Okay. All right, so let's open up the floor to discussion for the board. Does anybody have any questions, comments, thoughts on our conclusion on the monitoring report? Yes, Monica.
Okay. I know it was stated about the $250,000. On page 10, I hope this is page 10. See 10 at the bottom. Under section C, it says a notification of the board within 2 months, a month's expenditures on single purchases over $250,000. So if I have it correct, you had said that it would be for items that are unbudgeted. So where does that statement quantify in that?
Thank you. I think this is an example of us moving a little quickly and rolling over ourselves. If you look one page back, on page 60 of your packet, it's page 9 of this report, you see the original policy. What you were just reading was my interpretation of that policy. The original policy, 2915, item D, timely notification of execution of budgeted items over 250. The following page is my interpretation. Exactly what did we mean by that?
Okay.
And whether or not you guys find that interpretation satisfying. This is where I think perhaps there is a typo, that on page 9 in the original text of your policy, I wonder if that should have read unbudgeted, in which case my interpretation doesn't make any sense. I answered the wrong question. That's where I think an error might have come in. If there is no error, I think my interpretation stands and we need to provide more timely notifications.
Okay, all right, and that will come back to the board in regards to your research on that, correct?
Yeah, if you want to give me a timeline on that, I can, but I'm also happy to just bring it back as soon as I know an answer to it.
Okay.
Jesse has some further clarification.
Yeah, so I happen to keep all my old policy manuals. This is why I always ask for PDFs and not paper. But the first policy manual I received in 2018, the wording is the same.
Is it?
Yep.
Okay.
Timely notification. I mean, the lettering is different. It is actually point E, so we made some adjustments.
All right.
Timely notification of execution of budgeted items over $250,000. And this is, again, the original wording, and grant requests or awards over $100,000, which I do recall changing.
So thank you for that clarification. If that is in fact the case, then what's in here stands. The interpretation stands, the evidence found non-compliance, and we need to come back into compliance on this. There should be a timeline in here. I would like to I will look into this a little bit further, because I have a recollection that this is related to my signing authority. And it was a trigger the board put in to say, sometimes the CEO needs to do things in emergency. We don't necessarily want him to come back. The budgeted items, go ahead, we have approved that, go ahead and expend those funds. But there's a limit to what you can do that's not budgeted. So I want to go back and just double check, but if Jesse is correct and this is the original board approved language, then what's in this is correct and we're non-compliant and we'll become compliant.
Mr. Allenang has his hand up. Go ahead, Mike.
Yes, I'm not disputing what it says, but my recollection is the same as Matt's. And I think logically, the philosophy has always been that we approve the budget and he can spend the budget. It doesn't need to come back for individual expenditures. So I maybe it's just was in there wrong at the beginning and it's continued to be. But anyway, that's my recollection.
Okay, I'm sorry. Go ahead, Monica.
If there's if I have it correct, Jesse Miller, board member Miller, read the policy. So if there is needed to be an update to that policy, right? Unless that policy has been updated since 2018, then there will need to be an update to the policy if there's going to be a different type of standard, which is fine, but that would have to be the procedure in that case.
Any other questions? So if I'm reading this correctly, then we would probably go for C, and all the policies that are not 2.9.2 or 2.9.2.3 or 2.9.1.5, because that was the shorter list, would fall under 5 under C, that we would accept them as evidence of compliance and reasonable interpretation. But that 2.9.2, 2.9.23, and 2915, we would say for policy, that policy B, or number 8, that we would acknowledge and accept the CEO's stated noncompliance and the proposed dates for compliance. Am I on the right track here? Or does someone have another idea of what would be the better way? Yes, Mike.
Well, I'm trying to get the language in front of me, but it seems to me like it's B, that we believe that the interpretations are fine, the evidence is okay, but we recognize and agree with the CEO's statement of non-compliance on those certain items. Isn't that B? I'm sorry, I can't get it in front of me right now.
Go ahead, Jesse.
Yeah, that's my understanding, is that A and B are basically to accept it as the CEO has proposed, while C is if we want to differ from what the C, and that point 8 is like that there are certain items there kind of delineating when the board differs in opinion from what the CEO has stated, but allows for also areas where they do agree and where we parse things out. But B, I think Mike is right, that B is saying the board agrees with the CEO's assessment that he is in compliance where stated, and not in compliance where stated, and accepts his dates for compliance.
I suppose I was thinking ahead in that B was my initial thought, but since Matt changed the date from the end of the year to 4 months from now, I wasn't sure if, because that part wasn't in writing, if we had to adjust ourselves, but I would be more than amenable to B as well. Yes, Liz.
I'm a novice. So just to clarify, so it sounds like at least since 2018, the policy is correct as stated. So the 4-month timeline for learning about whether that policy was correctly or incorrectly stated and adjusting it seems to not be relevant at this point, since Mr. Miller read to us the policies as they're written. So at least as they're written, it is about the budgeted. Now, that is contrary to potentially the intention of the policy, but it seems like Mr. Carpenter's recommendation on point C, that he would report those expenses within 2 months, is what we need to be considering, and not the 4-month period, since I think we've already determined that the policy has been stated in this way since 2018, so it's not a typo. So the 4-month was about trying to figure out, is it a typo? And if we want to consider a policy since 2018 as having been a typo because it's contrary to intentions, that seems like a different conversation than the earlier one.
I'm thinking about what you're saying, and I also want to point out too that what we're talking about is the stated non-compliance on the part of Mr. Carpenter. And when he will come back to us with further reporting on his non-compliance. And I think on all that, we are talking a 4-month timeline versus what was originally stated, which was at the end of 2023, I think is what we're trying to clarify.
Okay, thanks.
But that was a very good point. Yes, Mr. Carpenter.
Sorry, I've confused things this evening. I apologize. So if Jesse's correct and the policy is the way it is, what I've said is we will become compliant by the next monitoring report. That's what I've said in there, so that's 12 months from now. Just to be clear about that one, that's just notifications.
Okay.
In the meantime, I'm also going to double check because I think there's a typo thing in here, and maybe I'm just misremembering it, but if I'm wrong, then 12 months from now, we'll have this all sorted out and I will report compliance. The
Very nice.
whistleblower on the CEO thing, that's the one where I brought up 4 months, and I'm mixing the timelines, and I apologize if I've caused confusion. What I said in here was I'll have that resolved by the end of '23. Thinking about that, I think it's also reasonable for you to add that you would like to monitor that particular section again, maybe by the end of '23 or before, because it pertains to your only employee, the CEO, because it kind of rises to a level where I think the board might want to look at that, particularly make sure everything's above board. That is your decision about the frequency of monitoring. I'm telling you that I will comply by the end of the year. I'm suggesting that you also monitor it again, but that's your decision.
And that is why I chose C, because if we're going to monitor it again, B says we're done. That we say we accept your non-compliant and we accept your timelines, but your timeline is for the 4 months would lend itself to C if the board agrees that we would like to see a monitoring report. So I'd like to open up discussion. Do we feel that the CEO's original timeline for the whistleblower at the end of 2023, but his suggestion that we may wish to receive a monitoring report earlier, 4 months from now, that is the discussion that I think we should entertain. Do you prefer 4 months, or are you satisfied with the end of 2023? Yes, Monica.
I actually had a question, but not exactly that one, if it's okay, but it's in pertaining to this subject matter. If I had it correct from what Mr. Carpenter said, that there is, at this point in time, besides HR, no outside or employee, if you want to go there, formatted committee that could report back to the board if there are concerns, right, from, I'm assuming, subordinate staff. And that's my question, is would it be possible to create that type of committee? Because that way it presents in my opinion, it presents a non-bias aspect. HR is there to honestly protect the employer. So with that, you have to kind of balance that somehow and have some type of committee that would at least report without having the bias of being the protection of the position of the employer, which is what HR does.
And I think that's what Mr. Carpenter was referring to by involving our attorney and that the attorney would be able to give us better direction on how to set up such a process. So that is what we would like to give him 4 months. If you are uncomfortable with the CEO determining whistleblower information on the CEO, I would certainly be happy to be involved in that process and that discussion, if that would make the board feel better. If not, I don't have a problem with having Matt reach out to our attorney on this discussion, because then we'll get a formal opinion in writing from the attorney.
That is true. That didn't say about the attorney, it's about a suggestion. So Matt, Mr. Carpenter can definitely reach out to the attorney and come back with, I guess, at that point in time, whatever the attorney's recommendation is. But what I was actually speaking of is a suggestion in order to try and allow for a with the attorney's suggestion, somewhere where the employees can say, okay, we have a source that we can go and report to that reports back to the board.
And I
if
think
necessary.
No, and I think that's a brilliant idea, but I'm hoping that that would be something that the attorney would come back to
Hopefully
us
would.
with, because it may be that, and I can't speak, I'm not legal, but the attorney may say that the attorney might be the more appropriate place to go to a whistleblower for the CEO. So I would be very interested to hear what their thoughts are and what the appropriate way that, we don't want to reinvent the wheel yet. So I would very much like to hear from counsel.
And I would too, but I wanted to bring that discussion up
No,
because I think it's important.
No, that was a very good point.
Thanks.
So now that we've had all this discussion, are we staying with B or, guess Jesse?
Just in the way I'm reading it, I don't see anything I'm gonna go, I would propose B because there's nothing that says that we can't also request a monitoring report earlier. So, I would say, by accepting it as B, if it turns out to be harder and, there are more legal or not loopholes, but legal complications that, warrant more time, that gives us the flexibility to provide the CEO with that time, but I think there's nothing here that says, and we can't monitor before then. So if Matt is doing all right and says that he's going to be ready by September, we can put that on the agenda for September.
That is the board's decision. Jesse, would you like to make a motion to
So
that
I will
effect?
make a motion that we accept the report as B, that, I'm just gonna go with B, and I'm not gonna read the whole thing.
Do I have a second?
Or-
Kyra? Yes, Mike, do you have some discussion on this issue?
No, I just had support for that motion.
Oh, wonderful. Okay,
But you
so,
can put Tyler down, that's fine. I don't care.
so if there is no further discussion on the motion, we will go ahead and take a vote. All those in favor, please raise your hands. Thank you so much. That passed unanimously. Was that clear as mud for you, Mr. Carpenter?
I'll be back.
Wonderful. Thank you, everyone, for all the hard work on that. I appreciate it. We're going to move on to no, we're not. We're going to move on to governance process policies, 3.5 through 3.8. That one falls to the board. And in review of these policies, I don't know if you had a chance to look at everything. Honestly, the majority of the policies, the answers were always and most. There were only 3 policies that I pulled out that had a lot of sometimes or some of the times and one rarely. And those 2 issues are actually something that is on our radar. 3.8.1.1 and 3.8.1.3 both have to do with board education in terms of onboarding and orienting new board members. There was a lot of really good feedback and discussion. One of the comments that really spoke to me was, I am not aware that a robust, highly organized orientation for new board members has been established. That person is correct. We have sort of been in a holding pattern with orientation. Of course, I've just taken over this position in October. I know that we have modified it somewhat. Mr. Carpenter and I, he does orientation in terms of organizational, and then I provide orientation in regards to policy governance. We've been slowly trying to get that, move that train down the track. It's my intention that I am actually in the process of, I've attended some webinars with regards to how other policy governance organizations onboard their board members. And I have also taken a look at remembering how I was onboarded, but also how we've recently onboarded. And we are going to look at developing some sort of format that isn't come as you may, that is more formalized. And with the board's approval, what I would like to do is, in response to this, is to send out within the next 2 months a board survey. I know everybody loves a survey, but just to get your ideas of what was your orientation like. Did you feel that it was beneficial? What did you like about the orientation? What missed the mark in the orientation? Maybe having sat on the board for a month or a couple of years, what you have learned and what you think may have been more beneficial to have in the orientation process. And I'd like to use that as a starting point in the discussion of how we can better onboard our appointees. Policy governance is not for everyone. It's not out there. It's not mainstream. And we want to make sure that we're giving you the tools that you need to do the job to the best of your ability, so that we're serving our communities to the best of our ability. And then once that survey would come back, then I would come back to the board and probably entertain discussion on either passing that off to the governance committee to work on, or actually developing an orientation task force. I'm not sure, I haven't thought that far out into the future, but so that's my thought on that. The other issue was the budget, 3.8.3. Someone rightly pointed out that it's a stretch to say that the board develops its budget. The amount is pretty arbitrary. It's usually based on last year's amount or a suggestion by staff. It's not based on estimating specific expenditures. This went through the governance committee, and we concluded that we would like to receive information, and Mike and Jesse, you can correct me if I'm wrong, about what the actual budgets were over like the last 3 to 5 years, what were the expenditures that we incurred, so that we can figure out, was the budget sufficient enough for what we actually did, and actually future thinking as well, because as we're moving forward, our budget may need to become a little bit more robust if we're attending more seminars, webinars, and those kinds of things. So that is going to come back to the governance committee, I believe, next month. Those were the two things that greatly impacted my review of it. And as the chair, I promise you again that I am going to work very diligently on the orientation process. But at this point, what I'd like to do is open it up to the board, hear any suggestions that you may have, or see if there were any other areas of concern that I did not bring up at this time. All right, I'm trying to be a good teacher and wait. Yes, Simi.
Just a thought. I think during my orientation, I met the chair and the CEO. I just wonder if maybe it would help to have more board members involved in orientation, just to have a little bit of back and forth with the oncoming person, and you can even sort of act out board discussions if that might have been a helpful tool, I think, for me. Thanks.
That's a very good suggestion, and I hope you put that in your survey. I also had thought that it may be good that when a new board member comes on, and we don't have that right now, but Mike has certainly done the lion's share of this, of reaching out to new appointees, of actually having a board member with seniority reaching out to a new board member to sort of be like the point person. That might be extremely helpful to a board member, to have one person to go to, rather than saying, who on the entire board do I go to for this information? So no, that was a really good suggestion, Simi. Yes, Elizabeth.
Thank you. So I think I'm still in the orientation process. So speaking, sort of in the current moment, one of the things we do at the university is exactly this, having sort of quasi-formally assigned mentors. I mean, it's not super formal, but have a point person, and I think it's really valuable for that. We're all busy people, and so for me to reach out, I may be more reluctant to do that. But if I know that, someone has agreed to be available, I think that sort of lowers that barrier in a very valuable way. So I think that would actually is an excellent idea. The other thing I wanted to say is I had the benefit of participating in a board retreat. It was a little bit like trial by fire. It's like, boom, here you go. But it was wonderful, actually, because it gave me an opportunity to see policy governance in action, and sort of help me, just sort of get a sense of the culture and a sense of the dynamics of the group in a way that I think a more sort of formal orientation per se would not have. So I think I really benefited from that. Obviously, you can't necessarily time a board retreat every time you're trying to onboard a new member, but to the extent that they're frequent enough, I thought that was a really beneficial opportunity for me. So I would definitely encourage more of that sort of hands-on as opposed to talking at training. I really benefited from that opportunity to have the hands-on experience.
Thank you for that feedback. I'm glad that you found that beneficial. Awesome. Any other comments on what we're discussing now, or anything that was not brought out in the policy itself? And because this is our own monitoring, we don't have to accept it or vote on it. We just hear it. But I want you to know that I have an open door or an open email. You can call me by phone if you ever have questions or concerns. I'm happy to help with anything. So thank you so much. Now we're going to move on to actual policy, the follow-up on the reasonableness policy of 1.1.1, and that is Mr. Miller.
Thank you, Chair. And I'm going to, now that I have the floor, I'm going to take one moment to say something I should have said at the beginning of the meeting, which is that I have been reappointed by the city of Ypsilanti, so you are all stuck with me for another 5 years. That said, so this was, the Service Committee took on review of policy, ENS Policy 111, which had to, that we had some lengthy discussion about the what constituted affordability in that policy. I do hope you all had a chance to look through the packet. Matt, per recommendation from our governance coach, Rose Mercier, provided alternative interpretation, an alternative report based on her recommendations and also based on our discussion. And I think we found that very helpful. I can say that after very thorough discussion, the committee was pleased with Matt's work in restructuring the report so that questions of reasonableness would be directed toward the interpretations, not evidence, which is something that we spent a lot of time getting hung up on. That actually addressed that partially addressed or I should say, that addressed part of the concerns I think that Monica and I really were championing about whether the Medicaid on its own was, one, whether we could be debating that at all as reasonable because it was initially presented in evidence, but something else that he brought in, which was very helpful to know after the fact, was that was not in fact the only qualification for the fair discount program, that we do accept certification from other, or I don't know what you want to call it. Yeah, there's other social service agencies, accredited social service agencies, which we accept as justification for qualifying for the Fair Deal program. So I think that that was mainly what we were talking about, is just saying we can't just go on Medicaid. So in talking with the Service Committee, that was kind of dealt with. We also talked about the history of fair discounts, how the fares, all fares are highly subsidized. For paratransit, the subsidy is immense. The cost per trip is around $40, while the fare is only $3. So we had some questions about, in terms of what Rich had been talking about with paratransit, that was not covered in the report, but we did have a chance to talk about, was, the existence of a subsidy a qualification, would that have met would that have been included in the, as an affordable, would that fall under the definition of affordability? I realize I'm kind of going on. That was a while ago at this point. I'm reading back from my notes. I think after the thorough discussion, we were really happy with the alternative. I think a lot of the issues that the board had come up with during the discussion were dealt with by a restructuring of the report, and that I think we did eventually tackle the question of, or do we want to address the definition of affordability, or do we want to examine the affordability language? And we came out of that at the end of the discussion that the service committee was fine leaving that as is. Though of course we will open that up to the rest of the board to see what their state or what their feelings on the matter are. I want to check in with Rich and Susan to see if there's anything I forgot.
I think you did a pretty good job, Jesse. I think you covered it.
Well, maybe thorough, I don't know about good. So yeah, I'll open this up to the rest of the board if you'd like to know more about the conversation, or if there, I think we should also discuss, like I said, I hope you've had a chance to look at the report and that you've seen, I think Matt did a good job of identifying the changes, the differences between the two styles of report, the original report and then his what he kind of wishes maybe what he would have submitted, knowing what we know now.
Jesse's opened up for questions to the board. Does anybody have any questions? Yes, Monica?
Just thank you to Board Member Miller and the committee for doing the additional work and doing the clarification, especially as it relates to the accredited outside social services agency. That's huge. Just not to make it one barrier of entry, that it can be multiple ways that people are eligible and to be certified for the reduced fare program. So I just wanted to thank the committee for that work and being able to get that information.
Very good. Do we have any other questions or comments? I echo what Ms. Ross Williams said. Jesse, thank you for you and the committee for all the work that you've done. If I read this correctly, these are drafts that will be possibly implemented at next year's report, because we did not ask for the report to come back to us.
Correct. The vote of the board was to accept it, so there's no further work. And since the service committee is not recommended that we need to address policy language, there's no further work required for this.
Fantastic. Good job. All right, we're going to go ahead and move on then. We're going to move on to board, no, there's nothing there. We're going to move on to operational updates now, and that is the business plan, and that is Mr. Carpenter.
Thank you, Madam Chair. Just a quick update for you as a lead into the beginnings of the beginnings. I guess we are at the beginning of the end of the, no, we're at the end of the beginning of the budget process. So what you have at your seat is the fiscal year 2024 business plan. This is the upfront conceptual introduction to the budget that Ms. Reed is going to start building very soon and walk you through a timeline of in just a moment. We package means together, all the operational activities and expenditures necessary to achieve your ends and comply with your policies. We work as staff to pull them together and organize them. First in the business plan. This is intentional, without numbers, without digits, to just try to focus on the big pieces. Like a game of Tetris, are we putting the big pieces in first? And we'll worry about the dollar signs a little bit later when Dina comes forward with things like the capital plan. So that's the intent here. You can think of this as maybe the strategic planning upfront part of the budget. We're previewing some of the major expenses and cost drivers that are going to be coming forward, particularly for change items. And so I want to walk you through those at a very high level. You have the document in front of you. I'm not going to read it, but I also reassure you that it's a living document. We keep it updated as necessary. If you notice something in it next week and you want to chat about it, feel free to give me a call. First of all, 90%, 95% of our operational budget is already spoken for. It's in keeping the buses rolling. That's what most of our budget, capital and operating, and most of our staff spend most of their time doing. So maintaining services is a huge part of this. We have long since fully restored all services post-COVID, so that's not really a concern at this point, but simply maintaining them Seems like a foregone obviousness, but we want to make sure it's at the top of mind. Continuous improvement, every organization, every individual needs to continue to grow, and we certainly have things in here that speak to that. The most important part of this business plan is operationalizing the long-range plan. Over the last year or two, the board debated at length our long-range plan, the TheRide 2045. We're starting to turn that into a to-do list, organizing the very projects and the operational initiatives, the capital construction projects. Capital construction projects that are contained in that plan, chunking them up into 5-year increments and beginning to demonstrate how we see them sequencing and unfolding over time. So it really is the execution of the long-range plan. We use a lot of Gantt charts. We love Gantt charts, good project management tool. You can see on page 11 a Gantt chart for our work plan. This generally doesn't include keeping the buses rolling. We're primarily focusing just on the change initiative. So if you don't see anything here about continue to provide services, don't worry. That's a foregone assumption. This is about stuff we're going to change. We give this to you in sort of a multi-year Gantt chart because you have asked for a strategic multi-year context as part of your policy. So we're endeavoring to do that. That is mostly the operational work, the new services that are going to be provided. And then if you were to look on page it's 14, but I think it's actually 15. You see another Gantt chart that relates to our major capital projects, and that might be more exciting. So there's a lot of big things coming down the pipe, some of which are routine state of good repair, making sure the buses continue to roll, we have replacements, the facilities continue to be in a good state of repair, but also, again, implementing the long-range plan, and right at the top, Ypsilanti Transit Center redevelopment. So you see some timelines involved in all those things. So happy to take any questions now or later on whenever you notice something about this, but this is really, it's a tool, it's an alignment tool. Are we aligned with your policies, with the long-range plan you approved? Are we organizing ourselves in an effective way? It's a communications tool to help just sort of explain at a high level how we see all of this unfolding. And it's a way to preview some of the means and the main cost drivers that are going to go into the budget. So at this point, it's a living document. If you have any questions, feel free to let me know now or later. And it's a good lead into the budget that will begin in the next few months. So Madam Chair, if there are any questions on the business plan at this point, happy to answer them, or we can get into the budget timeline.
I only have one quick observation. There seems to be a paging error that probably should be looked at. I was having a hard time following you because I couldn't find page 11. So as I've now just pointed that out, does anybody have any questions, comments for Mr. Carpenter or Rosemarie with regards to the corporate business plan for 2024? Yes.
Matt, I will email you most of my questions because as you can see, I was taking a lot of notes, and business plans is something that I do. But it was a couple of questions I wanted to just ask here at the board meeting. I think one had got resolved, but the other one is, yep, here it is. Basically, under page 14 of 26, because I know this, it has, board member Kathleen said it was some paging errors. Bus stop improvements, particularly, are we looking at also inside of the, because I see this goes from 2024 to 2032. Looking at additional shelters, because I know this has been a question that has been, at least for the township, is to, get some additional bus shelters on major roads.
Yes, this work plan primarily deals with pouring concrete to create lead walks. The primary goal here is to make as many, if not all, bus stops wheelchair accessible within a certain period of time. As a routine course, we always are assessing bus stops for the potential for any sort of amenity, whether they be a shelter or a bench. Usually those are distributed based on utilization numbers, but we're also open to having discussions if there's a special need, for example, near a senior center or a well-used park or something like that. There are exceptions to the utilization. We're happy to deal with those on sort of a one-off basis.
All right. And just thinking about, it was a question in regards to, let me see, or a thought process anyway. I will get to it. I think it was in regards to some of the budget as it relates to staff budgets, and it had a comment on here about basically if you wanted to see those line item budgets, you kind of had to request it. So I just wanted to let you know that's something I'll probably be coming back to you about in their emails, is to see some of that line item budgets where I'm asking for requesting, if that's okay. Otherwise not, I think everything else, because I have a lot of notes, I'll just go and I'll just email you personally, so that way I don't take up board time.
Mr. Chang.
Yeah, actually, so I just had a more terminology question, I guess, just to help me with some better understanding, because there's information technology and technology upgrades under continuous improvement. And the definition, it really talks about software and hardware needs upgrades. I assume that's considered separate from implementing new technologies, right? Because I mean, things are evolving, there might be new technology we can invest in. That's not considered part of this capital work plan, I assume, like that's separate, or is that actually included in this?
I'm gonna call and assist. What is it they used to say? Do you want to be a millionaire? I'm gonna make a phone a friend.
Phone a friend.
Thanks, Rich. So yeah, we do have a couple of components, and in the long-range plan specifically is where you'll find most of those longer-term technology improvements, where we plan to do some analysis around things like our fare, how we collect fares and things like that. But then there's also replacement of current assets, just the kind of the day-to-day function of making sure that our backbone or infrastructure gets upgraded on a timely basis so that we can maintain the services that we have and be prepared for future upgrades, and have the capacity to do that. So there's two components to that. But there are capital portions to both, as well as operating.
Okay, so if I can have a follow-up question. So if I understand correctly, or read this Gantt chart correctly, I mean, it's not that only in the fiscal year 24 that technology and information technology deployments and equipment's only going to be analyzed. Like it's a continuous thing, right? So as they say, like in the IT world, as soon as it's deployed, it's obsolete.
Yeah, that's a great question. In our capital plan, there is actually technology improvements budgeted throughout the projection period. And in the new capital plan that we present, there will be as well.
And another point, and thank you for clarifying, it's an opportunity to improve the terminology and how we clarify things. Dina's going to take this Gantt chart and turn it into a fairly large 10-year rolling capital plan that is a long-established part of our annual budget. In there, it will break out replacement of existing routine IT stuff from specific new upgrades and projects that we're considering recommending. So you'll see those sorts of details much more clearly in the larger capital plan.
Yes, Jesse.
I had a question. It's on page 10. It's under fiscal year 2024 projects. The heading is the zero emission support fleet, but the language seemed to be talking about buses and didn't really talk about the support fleet.
You're correct. That's an error. Thank you. We will change that text.
Could you speak to what?
Absolutely.
Thank you.
So this project, so there are three main pillars to our, dare I say, carbon neutrality aspirations. In your ends, you have an ends goal about us reducing pollution. The way I've interpreted that is reduce it to zero. and not just from buses, but from all operations. So there are basically three large chunks. I'm kind of going after the highest yield issues first. The buses, as you guys know, we're having long conversations about that. I owe you a recommendation in October. That's the big one. We're a transportation company. Most of what we do is buses. So obviously that's the major source of pollution, but it's not the only one. Our facilities, including park and rides, are also things that need to be reviewed. This one is about everything else we drive that's not a bus, essentially. This includes the TheRide fleet. You see the shorter buses with the wheelchair lifts around town. But we also have a number of what we call non-revenue vehicles. These are minivans for shuttling staff to the beginnings and ends of their work assignments. Operational pickup trucks that in the winter are a snowplow, in the summer they're out hanging bus stop signs and stuff like that. So there are a number of these other vehicles. They're not buses, and we have the opportunity to handle them a little different. Not to go in too far in the weeds, but battery technology becomes much more viable with these smaller vehicles because the duty cycle, they're not out 16 hours straight trying to heat a passenger compartment. So the energy profile is very different. So we decided to hive that off, treat it a little bit different. As all three of these things, and they are addressed in here, the bus review continues to go on. Everything else with four wheels that's not a bus, and the facilities. And I think that covers probably 99% of the pollution. Anything else that doesn't fall into those things, office supplies, all that stuff, we'll kind of mop that stuff up at a later date. But I hope that's clarification, and thank you for pointing out that the text is incorrect.
Any other questions or comments? Yes, Liz.
Would it be possible to provide a very brief update on the status of the Washtenaw BRT project?
Sure, and I can look to Forrest for assistance as well. So Washtenaw BRT is clearly identified as a very high priority project in the long range plan. It's effectively the main spine of the future route network. It's not the only BRT. There's also a north-south one in Ann Arbor, but it is the main one. It's something that we have been discussing off and on in concert with our partners at the Regional Transit Authority for several years. Forrest has a work plan, and the BRT study is on that work plan. We're also sort of piggybacking on some MDOT work on Washtenaw Avenue right now. They have a couple of studies going on, including a Pell study, planning and environmental linkage. They change the acronyms every 6 months because they get stale and they need a new one. Keeps me on my toes. That is primarily, I want to say, a resurfacing project, but it may have some opportunities for bike lanes and sidewalk gap filling, which is an important precursor to a BRT sort of thing. So we're tag teaming along with them to help, frankly, refine that scope up as close to BRT as we can. We're not just going to shoehorn a whole BRT thing into that, but we can get a few things, I think, out of it. And we are starting to talk with State Representative Jason Morgan about the bridge over US 23 at Washtenaw. That interchange is up for study by MDOT. It's effectively a bottleneck right now for traffic in that area, and any future BRT that's going into the Arborland traffic jam, that's one of the places it starts. That's one of the bottlenecks that contributes to it. So we're going to try to work on MDOT to see if we can get them to make that bridge a little bit wider. Beyond that, I think our BRT study our formal one is a little bit in the future. I don't know if Forrest has a microphone, but can we run that one over them, Kevin? And Forrest, can you add any details about our work on BRT?
Hello. Yes, thanks, Matt. Yes, there will be going to be a formal BRT study, like you see on the scan chart. We are starting, but we're waiting for where MDOT study are going, and then we're probably going to start comprehensive BRT study soon.
And I would be remiss if I didn't remind the board, because this is something we've talked about in the past, but there's been a lot of new faces. Along with the BRT study, we have to address our garage challenges. The garage is full. BRT is an expansion of the fleet. We presently don't have a place to house them. So both of those things kind of have to move in tandem. Forrest's got both of those things on his to-do list.
Any other questions or comments? Oh, I'm sorry, Monica.
One question. I don't want to save that one. And it was in regards to the external weaknesses on the SWOT analysis. And particularly, I know you had working from home, alternative learning options led to a decline in ridership. That was number one. That was on page 22. And then it was something about communication. I'll have to find the page, but how can the communication improve in this business plan in order to allow for more individuals to know about the options that TheRide has that can help to increase membership, ridership, within this business plan? That's one thing I didn't see.
Thank you. That's a good question. We have a community relations department. Presently, the manager role is vacant. I've taken a retirement. I've taken the opportunity to refocus that department. And as soon as I find a new manager, one of the things, and E-Team knows this, sort of pushing for how do we grow ridership? It is perhaps your most high-end policy, your highest strategic goal for us. So I've been pushing them on what are we doing? We've already identified that marketing and promotions, in addition to sort of general goodwill in the community, there's a lot of opportunity to simply let people know what we already do, to advertise, for lack of a better word. So I see a lot of potential in there, but I also delegate pretty highly to my direct reports. So not having anyone in that position, I didn't want to commit a vacant position on a business plan to doing something until I knew I had it filled. So it's a little, thank you for catching that. It is a little bit of yes, something we're going to be working on. It is something on the to-do list. I have not been successful in recruiting for that position yet, but as soon as it is filled, that is high on the to-do list.
Appreciate your candor on that. I have a question with regards to this report. Is this available online for the public at this time in its draft form? And if so, will they have an opportunity to comment on it? And you also had mentioned that it's open for board review. And do you have a date, an end date that you would like to have all comments directed to you so that you can move forward and take this out of being in draft?
So it should be on the website. We'll check on that, but generally, historically, it is. And we do welcome public comment through a variety of means. And if that's not up there, we'll make sure it is updated. For the board, I'd love your comments anytime. There is a point at which, as this is the lead into the budget, once Dina gets to a certain point of no return, a lot of these things are kind of set. And then we're more or less talking about the budget as opposed to the business plan, but it's kind of a fuzzy interface. I'd love to hear any other comments, I'd say within the next month, because then I think Dina can build them in at the very ground floor. So that would be my preference.
Very good. I find it very helpful if people have sort of an end date that they can have in their mind how much time they actually have and not miss an opportunity, because this is a very good opportunity for the board to direct the CEO and the agency in the ways that they wish to move forward based on our ownership and what we, what we promised in our, 2045 plan and all of that. So thank you for giving us that parameter. Were there any other questions or comments? Seeing none, thank you very much for all of that information. And we are now going to move on to the budget timeline, and we are now back to Ms. Reed. Thank you, Dina.
Thank you. So in your packet, you have a budget process timeline, but I just wanted to introduce it to you by talking about what's the goal, what's the goal of the budget process. And on the cover page, we talk about some statutory requirements that we have to meet with regard to approving a budget. So the goal of our budget process is one of many. It's to make sure that we have alignment with our overall goals and objectives of the organization, and that those are aligned with our business plan, which aligns most importantly with the board's policies and furthers the board's ends. So that's the primary goal. It's a guide, it's a plan by which we can function in an operational perspective, and it's in the context of a long-term projection, both from an operating and capital perspective. So we will be presenting a budget that will not only give you that context, but share with you some risks that whatever risks we have in the budget, so the board is well informed. We will present a balanced budget. That's what we're required to do. And that can mean that revenues may exceed expenses, but it has to be that they have to be equal, or revenues have to exceed expenses. That's the definition of a balanced budget. We will also be developing that budget mindful of the current environment that we are operating in. We will be budgeting for current services, current commitments that we've already made to the public, and funding to support those commitments. And we will also be, when focusing on the capital budget, we will be focusing on maintaining current assets first, and keeping them in a state of good repair as required by the FTA. We also incorporate value added and expansion projects, which are in alignment with the board's ends, to further the board's ends, in alignment with the business plan and our objectives that we set in the business plan. We also have a requirement and enjoy sharing our information with the public and getting their feedback. So as you'll see, as I walk you through the timeline, there are explicit opportunities for that in addition to the regular board meetings that we have. Our budget starts and ends on October 1st of the fiscal year and ends on September 30th. So we are just now starting our in-house development of the budget with departmental staff. We're looking at our performance for this year. We're looking at current trends. We're looking at external economic impacts. We look at leading indicators like what's happening with property taxes and things like that, as that generates revenues. And I'll get into more specifics about what those assumptions are in our next budget meeting. When we do the preview, we start to kick off what our budget assumptions are and where we see the budget going, and then how we incorporate any initiatives that are weighed and decided upon based on the business plan, which again is in line and to further the board's ends. So if you look at the timeline that's in your packet, I've color-coded this to try to give you a little bit of understanding about where the board has more activity and where staff has more activity. So the salmon-colored boxes are mostly where staff is doing most of the activities, staff development of the initial budget, which is what we call kind of our baseline budget, or what we think the budget is required to maintain our current services, maintain state of good repair, and operate as we promised, and as we've committed to the public. And then after staff prepares it and has reviewed it, then we share it with the board first. That's the next step, so that the board has an opportunity to preview the budget, give comments, feedback, share concerns and thoughts. We do talk about, like I said, in that initial meeting, we'll talk about what our assumptions are, so we know what our pressure points are and our risk factors. We usually watch those throughout the budget process. We'll talk to you about initiatives that we're either looking at funding or have just determined to fund based on our commitments in our business plan. And then we move on to share that same budget with the public. So even though we do share it as part of the board meeting, which is a public meeting, we actually do a public budget preview and public comment specifically just for the public. And we address that to the public. So we give the public a direct opportunity to review our budget with us and give us feedback. From there, we continue to refine the budget based on feedback and input and staff evaluations and further evaluations of current climate conditions, where things are headed, relooking at assumptions, and also starting to incorporate the initiatives. Then we go back to the board. We do budget reviews at the committee level. So you'll see, if you're on a committee, you'll start to see some of those budgets coming through committees. And then we go back to the full board again and present a draft budget to the board. And that is also incorporated with an official public hearing in August, which is a requirement. So you can be assured that we're going to meet all of the requirements. From there, we have another opportunity to refine the budget again. Generally, between the official public hearing and presenting the draft budget to the board on August 17th, as proposed, we would not have a lot of significant changes expected at that point, because we're sort of getting down to like the further refinements. And then we do another round in the committees just to make sure that the board in the committees have an opportunity to see the budget before we ask for approval. We do share the full budget as we plan to recommend it to the board, to our staff in a staff meeting before we go to the final board meeting, in case we have, missed anything or someone just has some very important feedback for us to consider before we present. And then we send the budget to the board in advance of the board meeting and ask for the board's approval on September 21st. It is required that we have a board-approved budget by the end of September 30th. In order to maintain our operations on October 1, we have to have a budget approved in place. So that last board meeting is a critical component of making sure that we can continue to operate on October 1st. That is our proposed timeline and a general overview of how we build the budget and how we see things going. We are certainly open to your feedback and comments on the timeline or any other portions of the budget process that you'd like to share.
Thank you very much. Dina, we're going to open it up to the board for any discussion you may have. Questions for Dina? Mike, hello.
Yes, thank you. I particularly want to mention to the newer board members that I would highly recommend reviewing the budget document from last year. You can find it on the website. It is a very comprehensive document, much, much more than just a bunch of numbers. It provides a whole lot of insight into the operations of ATA, some of the history. It's forward-looking, of course. And so it would be very helpful for you to be familiar with what this document looks like before you see it, what's being proposed for next year. I might also mention that the official budget document, both from Dina and from her predecessor, won Distinguished Budget Presentation Award, given by the Government Finance Officers Association. It's really quite an honor, and I think very well deserved. So really, those who haven't seen the budget document before, I really recommend looking online and reviewing last year's.
Excellent points, Mike. Thank you so much for that. Any other comments or discussion? Thank you again, Dina. We really appreciate it. We look forward to seeing what your staff are going to come up with. I think we're staying with you now for the quarterly 2 financial report.
Yes, for those who can't get enough of numbers this evening. In your packet, you have the second quarter financial statement. First off, I just want to share that this was reviewed in detail with the Finance Committee on May 9th. So there was some good discussion around the financials. And I'm just going to hit the highlights this evening. And then if you have any questions, I'll be happy to answer them. I'll just start out by mentioning the highlights of the income statement. And generally speaking, my comment here is that we're on budget. We do have some changes between quarter 1 and quarter 2. As I mentioned in the first quarter, if those of you who were here, or those of you who are not here, in the first quarter, I mentioned that We did have significant staffing issues in finance that we were working through, and that there were some areas in Q1 where we thought we had some catch up to do. And what you're seeing in Q2 on some big swings on the expense side is a result of those catch ups. So the good news is that we are getting back on track, and we have made some journal entries and paid some things that were a little bit lagging in Q1, and they're catching up in Q2. So when you look at the year to date, we are pretty much on budget with expenses trending just under in salaries, wages, and benefits. There are some vacancies and things that are driving that, nothing significant from an operational perspective. So all in all, on the income statement, we are trending on budget. If we ended the year on March 31st, we would have a surplus of 5.6 million, which is in line with what we had budgeted for the full year surplus for this time of year. So we're on track with that. I also like to point out what we're using in federal pandemic relief funds. As you know, we've obligated all of our federal pandemic relief funds, and we are using them to the extent that we can, as quickly as we can. And we continue to spend those down. We have about 13.2 million left in total of all of the pandemic relief funds. We will continue to spend those throughout this fiscal year. We expect our pandemic relief funds to last into fiscal year 24 at this point, as we planned. That will help us get through till the millage point, where we start collecting the increased property taxes based on the new millage that was approved last year. So we are in a good position there. The other highlights I just want to mention are on the balance sheet side. We are meeting our target in terms of operating reserve. We're above target and have been continuously over the period that you see here in the report. Our total net position continues to be stable and strong. As it was reported for the end of last year, we're continuing that through this year. So our net position is good at 99.4 million. You can see that we are maintaining our reserves as required and planned. We are increasing our capital reserve over time, which is what we had reported we would do with the surplus at the end of last year and continuing into this year. So currently in capital reserve, we have around 29.8 million, and we'll continue to contribute to that as we have a surplus going through. There was one question in the Finance Committee on the cash flow schedule, and that was just about variances that appear throughout that schedule through different quarters. And basically, I just want to share that this table just represents the inflows and the outflows of cash, demonstrating payments of expenses. It also includes when we do drawdowns for any federal funding. So where we get reimbursed funding from the state or the federal government, if we do a drawdown, it could be significant, several $1 million at a time. So it can result in swings in the cash flow statement. But ultimately, what we're looking for here is to make sure that our ending balances are strong, that we're properly reporting the carryover to the beginning balance, and that through all of the cash flows are consistent with what we're seeing in the financial reports, and they are. Our investment summary, we had an investment monitoring report earlier this evening, and we reported some investments there. This is a similar table here, and basically our investments at the end of March are very similar to the investments at the end of December. We are currently in a favorable cash position and are considering additional investments. We won't be investing in anything different than what we have here in terms of the instruments, but we do have additional cash that we plan to invest. And how we do that is we look at what our needs will be for capital funding, and we try to stagger the capital investments over a period of time, so we have maturities coming due at the time that we're going to need them for our capital expenditures. So while we're evaluating our current progress this fiscal year and looking at what we think our projections will be as we move into the budget process, we'll play into what time frame we make these investments. Currently, we have investments out to 2025 in terms of the bond maturities. So this is just a summary of that. That concludes my financial report, and I'm happy to answer any questions that you have.
I'm wondering, Dina, if you could just take a brief moment to give a synopsis of why our capital reserve is so large, why we're spending down our CARES and all of our funding that we received during the pandemic, to explain to our newer board members what the future is for those monies.
Thank you. I'd love to do that. So the IIJA Infrastructure and Jobs Act provided for much additional funding in the form of CARES Act, CARISA funding, and ARP funds. As soon as we receive those funds, we don't actually receive like a check, it's all reimbursement. Let me just make that clear. But it is available to us and it gets awarded to us, and then we have to do what's called obligating. Once we obligate those funds are then available for us to draw down as soon as we can demonstrate that we've spent them. The strategy behind drawing down on those funds as quickly as possible was to make sure that we would be able to use all of the funds and there would be no risk of changes in the government. That you may be hearing about that now, where the government is looking at the opportunity to kind of stop anything that's not obligated now and essentially claw it back. So if we hadn't obligated those funds and we hadn't spent those funds at the rate that we are, we could be at risk for losing those funds. And there are examples of that now where agencies have not obligated their funds and therefore they're just going to lose the money. So the strategic decision by the agency was to spend down that money as soon as possible. And to the extent that created excess funds in the operating budget, we would then put that money into reserve to be used for capital projects. The capital plan we presented last year as part of the budget process very clearly demonstrated that we have that we can not only use all of those funds, but that there is a plan for those funds. There are specific projects for those funds. Those funds can be used for our local match. So to the extent we are able to get federal funding, we can use those funds for the portion that we have to contribute towards the capital project. And if we aren't able to get funding for something, then we can choose to use those funds directly for any particular project. But we have a specific plan with specific projects that are in line with the long-range plan, which also was approved by the board last year and furthers the board ends. And if we looked at the projection through the projection period of the capital plan, we would still need more money than what we have. So even though we are able to fund more projects with that funding, we're still aggressively pursuing additional grants, discretionary grants. We've been fortunate in accomplishing that and getting earmarks and discretionary grants this year, and those will all be programmed as well into this capital plan that will come forward this year. But it's important to note that even with all of the capital reserve that we're building, it's already dedicated to specific projects. And we actually still have funding we'll need to get in order to do all the projects in our capital plan.
Thank you for that. Yes, Matt.
She did a great job. I just want to emphasize one thing. You will hear in the next week some sort of debt ceiling deal from Washington, D.C. It is now a given, very quickly became a given, that unobligated COVID relief fundings will be clawed back. It went very quickly from might be to, oh yeah, they're dead, real fast. So I want to just reemphasize something Dina said very well and reassure all of you. All our stuff is obligated. That means spoken for, and the bulk of it's already spent down and in our capital reserve. This was a decision we made with you. I think like 2021 maybe. It was a conscious decision, strategy by the board, developed and proposed by staff, accepted by the board to take this approach. Dina and I had some frantic phone calls while I was in Denver a year ago that this could happen, and so we just leaned into it to obligate as much as we could to pump up that capital reserve for whatever our priorities are going forward. There are a lot of projects, none of them are written in stone just yet, but you will hear some sort of deal. 99% sure they're going to say unobligated funds clawed back. We are safe. Everything's obligated. We've spent most of it, so you can rest easy that will not affect us.
Thank you so much for that. And go ahead, Mike.
Yeah, it's a good discussion of the capital reserve, but I think it might be worthwhile for Dina to spend a couple of minutes talking about the operating reserve, which is another very important reserve we have. You know, what it is, why we have it, what these months mean on that chart that's next to the balance sheet, I think would be worthwhile, particularly for our newer board members.
Sure, happy to do that. So on the balance sheet, I did touch really briefly on the reserve target. The reserve target has been set to make sure that we have enough operating funds in the event that something changes or we suddenly lose revenue. We have this money in reserve to make sure that we can maintain appropriate cash flow. That cash reserve target was set at 2.5 months. So we required to maintain that amount in operating reserve. You can see under where it says reserves, there are balances, and you can see that the reserve balances have been about 12.9 million consistently over the last year or so, and that's because our budget doesn't really change a lot. I mean, in the last couple of years, it hasn't had big swings, and when it does, we recalculate what we think that operating reserve needs to be. Like, for instance, when we do the budget this year, we will have increases in our budget because we're expanding services and things like that. We'll reevaluate at that point in time to determine if we need to increase the reserve to maintain our reserve requirement in the operating reserve. If we do, what we will do with the surplus at the end of the year is we will fund that reserve partially and put everything else in the capital reserve as we promised to the board. We did increase the operating reserve about a year and a half ago, when we went back to full service in 2022. We had to increase that operating reserve just a little bit to make sure we maintained our reserve requirement. And you can see that we're reporting on that because it is such an important tool to make sure that we have money to protect ourselves in our operating environment.
Mike, did you have anything further?
No, I did not.
Yes, Jesse.
While we were on that topic, so, so I can see with the green bars on the operating reserve that the dollar amount has remained the same, but there's more of a fluctuation in the months of, of our budget that represents where, the last report, there was a bit of a spike. I remember you talked about, but I don't remember what you said. Could you talk about why there was that spike and now we've returned a little bit closer to like a baseline?
Yes, so the way that is calculated is based on the current quarter's expenses. So that line there is based on whatever the expenses were for the quarter. And in Q1, you might remember that some of our expenses were a little bit lower than maybe what we had anticipated. So that would indicate that we actually were exceeding the reserve target by more because we didn't have what we expected in expenses. In Q2, we made up for that because we caught up on some of those, some of the accounting that we had talked about. And so it actually dropped a little bit lower than it had been in the past just for that quarter because we had more expenses than we would normally have in a quarter. I would expect that next quarter would be a more consistent level of expenses because we're kind of back up to speed with our accounting, with our accounting. And so I would expect it to be about the same or maybe even a little bit higher because our expenses will drop just a little bit again, just for the quarter. So there is a fluctuation of that because we're always looking at is it adequate for this quarter? We want to make sure we're maintaining that consistency each quarter.
Yes, Matt.
Thank you. Just a historical comment on the operating reserve. And Mike and Kyra will remember that this has been in the past a more serious challenge. Yes, these fluctuations, we should keep track of it. As long as it's bouncing above that line, we're reasonably good. In the past, it was much below that line. The operating reserve is basically our cash flow buffer to make payroll should something happen that disrupts normal operations, like, say, a global pandemic. or just MDOT missing a billing cycle, which has happened. So that's the intent of this. It's just a buffer. It's an air mattress to soften the blow. In the past, prior to any board member or staff member who is here, we actually rated our own operating reserve to accentuate ongoing operations. And when we couldn't get it up to the target of what we said we should do, we moved the target down so that we were complying with our own standard by moving the goalposts. It took us, as Mike and Kyra will remember, several years to build the operating reserve back up to a stable level, where about 2 to 3 months is sort of the general best practice. So yes, the fluctuations are important. We should keep an eye on it. It will naturally bounce. The most important thing here is that we never dig ourselves down into a hole again, because tapping your operating reserve to pay for ongoing expenses, that's bad. We don't want to do that. So I'm satisfied every time I see this sort of hovering above the target threshold.
Sorry, technical difficulties, one moment. All right, do we have any other further discussion or questions? All right, thank you for that report. We're going to move on now to our Title VI preview, and that is Mr. Yang and Mr. Carpenter.
Thanks, Madam Chair. So this is just give the board a preview of the Title VI program update staff are working on with support from external consultants. Prepare the board for future decisions because FTA requires board approval before we submit to the FTA. So I think I look around the room, I think probably half the board members haven't really gone through this process. So FTA require the agency to submit this program every 3 years, once in 3 years. Some of you may remember back in 2020, roughly November 2020, you approved our current Title VI plan. So you may want to ask, what is the Title VI plan? So basically, the Department of Transportation, FTA, have this regulation, require all transit, their funding recipients to submit a Title VI plan. It includes a lot of things there. For example, our policies relate to Title VI issues, complaints, procedures, some demographic information and service monitoring, major service change policy and equity analysis policy and public input policy. There are a lot of contents in this report. Probably you can tell I got a copy there. No, I'm just kidding. But it's over 100 pages report. Back the time, board approved that plan as part of the consensus agenda because it's highly technical document staff are developing. So of course, FTA require board approval. Basically, it making sure all our services are designed and delivered in a non-discrimination manner. I think a board, if you remember your policy 2.12, directly spoke to that, discrimination related. So it is important because it could affect funding, AAT eligibility for federal funding. We have to submit it on time by December 1st. Board has to approve it before then. And also when you look at the board policy 2.5.2 and 2.0, it also speaks to regulation, federal law regulation, and not jeopardize federal funding. So that's important for us to go through this process. Just quickly on this timeline, initially staff did not anticipate to update our equity analysis policy and public input policy. Based on the preliminary review by the external consultants, those policies are to be updated. Even though FTA has accepted our current, last Title VI plan, which includes those two policies, but according to the consultant's preliminary review, we need to review and update those two policies. In terms of the timeline, from May, like this month, next month, mostly data, document review and gathering. And then we're going to develop some draft recommendation to some policy update for board review before it goes to public, probably July. And then we can bring back public feedback with a draft recommendation for board to review and approve those two policies in August. And then we go out, of course, based on the new policy, we have to do equity analysis for all the service change we're working on as part of the millage plan. So those service change and the equity analysis are going to go to public review in October. So then November board, hopefully October we'll have a draft Title VI program for board to review and approve. And then before we implement any service change next year. So that's basically the timeline. But a couple of things I want to mention here. Because as you know, staff are planning on a board retreat talking about equity. When we talk about Title VI, basically we're talking about non-discrimination. I think the word equity probably has different meanings when you have a board retreat, have that discussion. We don't want a board to feel being rushed because we have to submit to FTA about this Title VI plan. Ideally, board should have an equity conversation and then give us some guideline for Title VI program. But again, this program will be updated every 3 years. So board has opportunity to update, to develop any policy if desired. And then staff can, update the Title VI plan accordingly. So there is a process. So, you develop policy, staff will monitor it, develop some internal procedures to meet those policies. So that's just to kind of give you a quick overview. Next few months, you will see some draft recommendations, a draft plan for you to review and then approve. Thank you.
Thank you, Forrest. I'm trying to remember from last year when we did the public engagement, those were via Zoom, and weren't they, if I'm remembering correctly?
Yeah.
Okay.
If that's a part of the service recovery plan. So we had, because there were some major service changes, we need to do some equity analysis for those service change. And that's the part of the public review process.
So when you're doing public review, then will that just be an online process where they can review it and give a comment via a form or phone call or whatever then?
So is it going to be a mixed online and in person? So now with all the restrictions gone, we can do in person, like at the BTC, YTC, do some in-person engagement and combine with virtual Zoom meetings.
Wonderful. Well, I guess what I'm asking, and I wasn't clear, is this is an excellent opportunity for board members to engage with our owners. There are several members of the board who have attended meetings in the past, and it's just a really wonderful way. First of all, the public is to see that the board is engaged, but we also get to hear what the public is saying. So if we could please include the board on those dates and times, not only in person, but via Zoom, for anybody who might have an opportunity to attend, I would highly recommend it because it is very rewarding.
Absolutely, yeah. We'll keep you informed.
So now we'll open it up for discussion to the board. Are there any questions for Forrest or discussion? Seeing none, thank you, Forrest, very much. We appreciate all the hard work that you do. Now we're going to move on to the CEO report, 8.5. Mr. Carpenter, back to you.
I remember one time we had a late meeting and you turned it over to me and I said, okay, I'll only be a few more hours. And you kind of, you bought it for a second. I realized just now I could do it again, but no.
Please don't.
No, I'm not going to do it again. CEO report is in your packet. I'm not going to go through it in detail, but just hit a couple of the highlights. As you see the graph, we are continuing to track ridership recovery in line with national average. This is pretty normal. I was actually making a presentation to the Regional Transit Authority board this afternoon. Rosa came with me down to the Wayne County Community College boardroom in Detroit. We shared this graph as well, but we also shared the ridership growth chart for the Detroit to Ann Arbor service, which continues to see ridership increases, and we're up to like 5,000 a month, which for a new service that's only existed since 21 is really good, considering that's the reestablishment of scheduled passenger transportation between Ann Arbor and Detroit. Is the first step. Since 1983, I'm pretty happy with how the ridership is going there. It's a great first step. So that's moving forward. Ypsilanti Transit Center first stage renovations to begin to get ready for staff. I'm happy to report as of this afternoon, the glass is done. The building is back open to the general public as of tomorrow, so we're done a day ahead of time. So I'm happy about that. Staff still have some renovation work to do within the customer service area, IT, information cabinet repair, more basic stuff. But as soon as that's done, I'm sure staff are going to be excited to move in. They're probably measuring for drapes right now. Several board members and staff went to the Policy Governance Boot Camp in Grand Rapids, and I'd invite them to share any comments they have. But just real quickly, one last thing, the long-range plan status update, the thing to, just to note here on bus propulsion, you may recall I made a promise to our mechanics. This kind of goes back to staff engagement, which has been something that we've talked about in the past, that I didn't want to make a recommendation to you about any particular propulsion technology until the mechanics had had a chance to get their hands dirty with touching these actual machines. And I'm very happy to say that they have now been to Detroit to look at those battery electric buses, Flint to look at those hydrogen buses, and are packing up and going on tour next week to Champaign-Urbana, Illinois, to see not just their hydrogen buses, but their on-site electrolysis and hydrogen generation station. So an exciting thing there. So I'm hopeful that staff are going to get their heads around what this technology means, and then they can share that with me, and I can share it with you. So with that, open it up for comments from the boot camp attendees, and any other questions about the report.
Yeah, so I would advocate for anyone who hasn't gone to a boot camp on policy governance to give it a shot. I found it very worthwhile attending. Yeah, I would highly recommend it.
Mike.
Matt, it's really encouraging to see the ridership graph that we've passed and exceeded the national average on the chart for the first time. And maybe you've answered this question before, but of course, it's really important to know what we're comparing ourselves with, this national average. I mean, what's included in there? I mean, we don't have rail. We're not a huge city. Geographic matters, I'm sure. It would be helpful to refresh our memories, or at least my memory, on what we're comparing ourselves to. And if you don't have it off the top of your head, you could just provide it later.
I'm going to phone a friend and ask for us, because he's responsible for the numbers. But while the microphone is returning across the room, it is a mixture. It is big cities and small cities, and real-time data on something like this is not easy to come by. So for us.
Right. So Matt is right. So this is kind of reported by, I think, Opta tracking national database. They are tracking based some estimate based on translate app usage or some other apps. They don't collect real-time information, so that's the best information we have to compare to. It's a national, including all transit systems.
And I think for us, the national average number is what it is. It's the best we've got. It's context, but the most important thing is how are we doing against our own history, and how close are we towards full recovery and then beyond. Ridership growth was what we were trying to accomplish before the pandemic set in. Obviously, setback, there's no question about that. We're lucky that particularly the Ann Arbor, but also Ypsilanti area have so many universities. We have such a built-in ridership market there that really backstops in this particular area. We see a lot of variation across the country. A lot of, very large cities actually are suffering worse, which is odd. New York, LA, San Francisco, you may hear the word fiscal cliff. Those larger agencies were always much more dependent on fare revenue for their operating budget than smaller agencies. That's just a natural thing. As their ridership dropped, their fare revenue dropped, and it shot a bigger hole in their operating budget. Many of them have already expended their relief funds. Some agencies decided to go fare-free for the whole pandemic and keep doing it, but they were basically propping that up with their COVID relief funding. It's the only way, and that money is running out. So the fiscal cliff is a term you will encounter if you read, on the Transit Talent website, any of the news reports that come out nationwide. There is a wide variation across cities, but this number is the best number we've got. And the real thing is, how are we doing against ourselves and our own history?
Matt and Forrest, if I understood you correctly, first of all, this is a national average that includes any agency that's in this APTA database. Is that correct?
It's based on, like I said, there's a transit app. So a lot of transit riders use that transit app. So APTA use that transit app estimate, the national transit ridership trends. Yes, including all the transit systems who, I would say, transit app covers.
And Matt mentioned that there's large cities are not doing so well in recovering from the pandemic. And I guess it's easy to think of some reasons why that is the case. How is this data weighted? For example, because the large cities have so many more riders than, say, Ann Arbor, are they in there heavily weighted, or do they? How is the weighting done?
I believe this is just a total national ridership.
So it really would be weighted more toward the larger cities, probably because of that. I'm just guessing at that. If it's total riders, there's got to be a lot more riders in the big cities than there are in the small cities. I really don't know.
I think what Forrest is saying is that this is raw numbers. They're not trying to weight anything. But yeah, we should definitely take it with a grain of salt. Remember that New York City alone is probably 50% of the country's entire ridership. One city. They lose more buses every day than we have. So
maybe
a few big cities
New York
definitely.
City is 50% of this national measurement that we're looking at, in other words.
Could be.
Because it's done on total riders, if I just understood that.
Yeah. But I think what Forrest is saying, there's also smaller communities, mid-sized communities, things like us, and it's tracking total national ridership recovery compared to what it was before the pandemic. So the raw numbers, I think it's reasonable for us to compare ourselves to. I'm not going to swear on a stack of birals that it's 100% accurate down to the third decimal point, but it's a reasonable piece of context.
Thank you.
Yes, Ms. Ross Williams.
So I just want to ask quick question in regards to look like the Ipsy Transit Center revitalization. And obviously the plan of bringing the staff back in the fall, which is absolutely great. Also, I wanted to ask, when the staff come back, are there going to be also some additional security measures in place? Because there has been, talk about there, needs to be a uptick in some of the security.
I'm going to turn it over to George Brooks.
Yeah, a very good question. Just this week, myself and Yvette, we went down and introduced ourselves to the new chief of police. Very, very good meeting. We offered to him and he accepted. We are going to be putting a spot at the Ipsy location for a police officer. And we also are going to add an additional paid guard for additional coverage at Ypsilanti. I think the good partnership will work well. We're looking forward to that.
Good question. Any other questions or discussion? All right, we're going to close this topic then and move on to emergent items. Is there anything? All right, seeing nothing, then we'll move on to closing items. It's action item recap. Matt, will you be going over those with Kevin?
Yes, and Deb had to duck out. She had a personal conflict this evening, so I'm without my wingman here. I'll open it up to anybody if you want to catch an action item that I've missed. Rich is going to be sending out ownership linkage task force information to the city of Ann Arbor, and I think you said other letters might circulate later.
So I'll be sending to the first and
Okay, so task force. Okay. I owe you guys a whole lot of follow-ups on my partially bungled communication support to the board. We got to follow up on the whole $250,000 thing and then the whistleblower thing. So you'll be getting that information back. Look forward to any other comments about the business plan over the next month. Budget's getting ready to spin up. Other than that, I don't have any other action items.
Did you catch it all, guys? All right. We're going to go ahead and move on to the topics for the next meeting. So everything that is on there is a go for next meeting. I would also like to add, it's been a while, pre-pandemic, we used to not meet in July. The reasoning being that July coming here during art fair is just almost impossible. And so I would like the governance committee at the next committee meeting to review, is it reasonable to continue to meet in July? We did that during the pandemic. Obviously, there was a lot of extra business that needed to be handled, and that's why we did it. But also explore if we want to go back to the model of having July as just an off month, and then we would bring that to the board at the June meeting. The other thing that is of import is that we have 2 board members who have been working very diligently with regards to their concern on sustainability and policy development around that. That is Susan and Simi. And we're hoping that they will have I've seen an issue brief. It is not complete, but I'd like to have that on the board agenda for that as well, so that we can discuss that very important topic. Other than that, I don't have anything else to add unless I've missed something. Okay, the next thing on our agenda is 10.3, public comment. Do we have anybody in the wings?
We do. Jim Morganson.
Welcome, Jim.
You are unmuted.
Yes, because of the technical problems at the beginning, I was unable to participate in the public comment at the beginning of the meeting, but I've been here listening away. So, but I hope you I'm going to do my best to go through these things quickly. So the first thing I wanted to talk about at the beginning was agenda item 6.1, which was the reasonableness and policy for policy 1.1.1, which was the issue about the fair deal issues. And what I wanted to point out is in there, it was talking about Medicaid as being one of the things used. Medicaid is a very complicated process. There are portions of that program where you don't get a Medicaid card, even though you have Medicaid. And the other thing is that with the end of the pandemic emergency, all the restrictions are happening and everyone is having to recertify everywhere all at once, all together. And on state side on NPR, I believe it was last week, the head of the Washington Health Plan talked about probably thousands of people losing their Medicaid coverage, even if they still qualify, simply because of the overwhelming paperwork chaos and people coming on during the pandemic and not understanding all the things they have to do to recertify. So I just bring that up. One thing you may not know about me is I serve as the faith community representative on the county's Continuum of Care Board, which is the Department of Housing and Urban Development Coordination Council. It's a big official council, and we've been monitoring. What I can tell you is even with those 37 certified social service agencies, everyone is tapped out. And the funds that the county has, they're just completely tapped out before the end of the quarter when they have those. So I just kind of bring that up as a challenge. There are a lot of very low income people who are not connected, who work in our community at low income jobs and are not connected with a social service agency. So moving forward, I would like to participate in exploring that and helping out. And the paratransit thing that was brought up about how the fare is twice the full fare, that's because that's federal regulation. There's the federal regulation that says you have to have paratransit in the fixed route area, and the fare that you charge can't be more than twice the fare. So that's why that is there. So there are a number of those things going on that I will be able to hopefully help you with as you move forward in thinking about these things. Because as it is now, participation is not monitored, just the fact that it is available. And from some cases, that's a challenge moving forward. And I'll follow up on that with a letter. The other thing is that I'm on the county has a food policy council, and I'm on the food access and nutrition policy action team. And we had some communication with the board about trying to make sure that the routes that are available allow people to access healthy food. And we're doing some analysis to make sure that works and to let people know that those kind of concerns are still happening and moving forward. And it's hard. Some of the programs that have changed during the pandemic, like TheRide, which has all kinds of stuff. I know Cranbrook Towers, which is across from Briarwood Mall, has a grocery ride bus that goes to Myers because they have no other way to get to a grocery store. And they can't afford Whole Foods or even Bush's. So there's some things that we're trying to monitor and that those things are going forward. And finally, Title VI on the self-designated Title VI guru. People who've been on the board for a while know this. And I participated in the process that got the Title VI program to 100 pages. And then, so I know also that because of the pandemic in 2020 and the requirement that it be approved, the Federal Transit Administration allowed the transit authorities to simply reauthorize their existing Title VI program. And what, as I vaguely remember it, because Mr. Carpenter added in the fact that the AATA has the delegation difference. That was the one difference that they put in there in terms of understanding. So I would like to be, I think it would make sense for me to participate in that moving forward. The circular that authorizes the Federal Transit Administration to do the Title VI or provides the guidance is 10 years old. And I participated in a federal process that there was a federal docket about ways to reimagine that circular and to update it. And so there are all kinds of information about how that works in the real world and how advocates have found it works with authorities throughout the country. So that may be updated during this time period. Thank you for your patience for this long extended thing. And thank you very much. Bye.
Thank you, Mr. Mogensen. Do we have anyone else for public comment?
We do. Robert Pulowski,
Mr. Pulowski?
you are unmuted.
Good evening. Can everyone hear me?
Yes, we can.
Perfect. Thank you. For some board members that do not know me, my name is Robert Pulaski. I'm the Vice Chair of the Regional Transit Authority Citizens Advisory Committee. I'm from Southgate, Wayne County, but I'm currently calling in from St. Clair Shores, Macomb County. So a couple things I'd like to talk about tonight, and one of those addressing the garage situation. I know this has been a topic of the board and staff for, the last coming months, and some of the meetings I've seen recorded on YouTube. The garage situation is very much an issue in terms of trying to combine headquarters with some of the bus maintenance garages, and if you look at other agencies, if you go to Lake Erie Transit, you go to agencies like TARDA, they have a much bigger property to where they can actually have the facility to do the work that's needed. The location that it's currently at in Ann Arbor, I'm not sure exactly how that facility made everything work, but it did for a number of years. But I think it's just starting to grow out its uses, especially now since we're advancing the future. And there's times that we need to start looking at other facilities, whether it's in our service area. While during this meeting, I've been actually looking at other facilities in the Ann Arbor Charter Township area and some parts of Ypsilanti as well. We need to start really looking into the future of where we can grow this system, especially now since the 2045 plan is now taking headway, and we have the propulsion study, the electric fleet conversations coming up in front of the public and staff and the board. Bigger facilities are really, that's what's going to help us in the long term, especially if we have to go outside the city of Ann Arbor to do so. And the second thing I'd like to mention, and I'm not going to be too brief, I have been listening to the entire meeting and a lot of progress, especially since today's presentation at the Regional Transit Authority's board meeting this afternoon. The D2A2 service has been a hit since it first rolled out earlier last year. The ridership has grown, especially I've been getting on it pretty frequently lately, and there's been a lot of positive feedback. My organization, Transportation Riders United, we've been taking surveys on some of the routes and recording people's feedback. People recording going to Detroit for all the types of the events that are going on, but also going into the city of Ann Arbor for college and school and other business needs that are within the city, and a lot of positive feedback. Now, one of the things that we recorded going over was it's reliable, it always leaves on time, it's affordable. But the one thing that always sticks out is, we need monthly passes is what we need. And I'm not the only one bringing this up. A colleague of mine, Joel Batterman, the community outreach for Transportation Riders United, brought this up at the last RTA board meeting as something that we should consider as a partnership between TheRide and the RTA, to be able to give people who do frequently use the service to be able to have a monthly or a yearly pass to be able to use, whenever for a cheap cost to ride back and forth between both counties. So I just wanted to throw that across the minds of the board and staff to really consider that as a conversation between the RTA and just keeping it forward. But I have been in conversations with Jason Morgan, one of the House members, and he's not just focusing on Ann Arbor, he's focusing on other regions, including Oakland County and Macomb, to be able to focus on increasing public transit, especially now since we alleviated the Swiss cheese within Oakland County to expand transit. You guys got a good state rep, and you guys are actually getting the funding where it needs to be in Washington County. But the ride is one of the services in this entire state that's actually focusing towards the future, making the investments and focusing on the innovation of the fleet. So congratulations on that. And, I look forward to seeing you guys in person at the June meeting to be able to discuss some more topics between our committee and what we have future plan wise, but also partnering with TheRide and our committee to do some future projects. Thank you so much for the time, and look forward to seeing you guys in person next month. Thank you.
Thank you, Mr. Pulowski. Is there anyone else?
No, there's not.
That will close our public comment, and our last item is adjournment. Before we adjourn, I just want to say what a successful meeting. Thank you, everyone, for attending. It's so nice to see all of us here at full capacity. May I entertain a motion to adjourn? Ms. Ross Williams, do I have a second? Jesse Miller, all in favor, raise your hands. And we are adjourned. Thank you again.